So one of my primary arguments around the market recovery has been liquidity. And what did the RBI do yesterday? Announce more OMOs, more of buying of bonds. They do not want bond yields to go up because, as you saw, after bond yields came down on the 10-year GSEC, the last few days they've been inching up again, even though US bond yields have fallen pretty hard due to all the negative news flow. So why haven't our bond yields come down? They should. So that is what RBI is trying to pull off, and this is what they've been doing, taking various measures to get interest rates lower, to get liquidity increasing, and to reduce risk weightages, and get the currency to stop weakening. All of this put together are positives that will rub off on the market once the market starts to believe it. So right now it was under a lot of pressure and you had a 10-day consecutive sell-off. But yesterday it recovered for the first day. Now people are saying first day recovery, how can you say it's going to bounce back? How can you say V-shape recovery, etc.? So of course there is some degree of guesswork. It's not like you can know exactly how the recovery will happen. And once you get this oversold, I felt the right thing to do is anticipate. It's done and dusted. Otherwise, usually you do get a positive divergence on the RSI, which means you'll make one more lower low and then the divergence occurs and then it recovers. Or you'll get a recovery and then another secondary sell-off to retest the low or something like that. Or maybe a retracement. But the negativity just went on and on and on and on and on, that I feel that possibly once you're done, you'll just keep pulling up. And that is sort of what you saw even when you had the COVID lows. And as I've mentioned, most of the readings that you have are as bad as when we were in COVID. So if you've seen that kind of sentiment extreme on the downside, that's the kind of recovery you'd start looking for. Will it actually play out? We'll see. But I do think it's already visible in a lot of stocks that have started to pull back and make higher highs even when the market was falling, and that will keep increasing, and therefore the possibility of new lows in individual stocks will keep reducing, and therefore you'll be past the point where you can buy at the lows, and that is something to keep in mind. And one way to identify that is do some kind of relative strength analysis on this entire fall, which started on the 5th of February. Till now, and you might get an idea of what is outperforming and accordingly look at that. The top two sectors, of course, outperforming have been the metals and the NBFC space, specifically financials. But you can also add up infrastructure and PSUs now after that, and the rest we still to watch.